What is short selling margin in the stock market? A margin requirement for short selling is the amount of collateral that a broker requires an investor to deposit into their account before they can initiate a short sale. This margin acts as a security deposit and is calculated based on the value of the security being shorted and prevailing market conditions. Why is a margin requirement important? Risk management. Short selling is a high-risk investment strategy. The margin requirement serves as a buffer to protect investors from potential losses. Guaranteeing debt repayment. If the price of the shorted security increases unexpectedly, the investor is obligated to use the margin to cover the resulting loss. Market stability. Margin requirements help to prevent excessive market volatility. How is a margin requirement calculated? Margin requirements are determined by brokerage firms using formulas that consider several factors. Volatility of the security. Securities with highly fluctuating prices typically have higher margin requirements. Market conditions. Overall market conditions and the specific demand for a particular security can influence margin rates. Regulatory decisions. Decisions by regulatory bodies such as the Securities and Exchange Commission, (SEC), can shape the margin requirements set by brokerage firms. What is a margin call? If the price of a shorted security rises and the value of the investor's account falls below the margin requirement, the broker will issue a margin call. This requires the investor to deposit additional funds into their account or close out the position. Failure to meet a margin call may result in the broker liquidating the position to cover the loss. Example: suppose an investor wants to short sell a stock priced at $100. The broker requires a 50% margin. The investor would need to deposit at least $50 to execute the trade. Conclusion: margin requirements are a crucial safety measure for investors engaging in short selling. By limiting potential losses, they contribute to a more stable and orderly market. However, short selling is a complex strategy, and investors should consult with a financial advisor before undertaking such trades. Warning: investing in the stock market is risky. Be sure to do your own research and consult with a financial advisor before investing. This information is not intended as investment advice. The author and publisher are not responsible for any losses incurred.